I think I think the financial inclusion for organizations as well is there for them to be able to smaller organizations to be able to get on a good foot in terms of how they provide products that can compete with the larger organizations by using AI, by using data to make better decisions for their customers so that their businesses can perform better as well. So better efficiency, better cost controls, and reducing fraud. Um, uh, we look at obviously in the lending market in terms of risks, and one of our lenders has seen a 15% dropout through natural um, uh, by using open banking as part of their decisioning. They see 15% of those applicants dropping out that they see are fraudulent. So there's a self-select to come out of that. So using data, using AI to make decisions can help, as I say, improve the cost for a business. They also see with customers who they've used open banking to make that better decision. So they've looked at that person's actual affordability. Um, and that loan goes on to perform better at a rate of 40 to 50% against other loans because they've used the data, they've analyzed the data, they've identified risks, and they've been able to make better decisions by using that. So they're actually seeing better performance. So this AI isn't just about the consumer all the time, it is about the organizations. And therefore, they can offer products and services to more people because they can make that better decision. They can see the information more clearly. And yeah, so the underwriters can make decisions on good, reasonable affordability based on income and expenditure, and then all those other things that could impact their ability to repay in the future, like addictions, gambling, risk factors, etc., because they've got much more access to the data. Yes, they're making a better decision with more data.
So that sort of suggests that the AI is able to access medical records, for example, if they know about somebody's addiction, and that must raise all kinds of privacy issues, I would imagine.
So no health data, no addiction can be based on, if you think about when people are spending money and what they're spending on, you can see what they're spending on, but actually the time of day that they're spending the money on could imply an addiction as well.
Yeah.
There's so many angles to this that if you take it if you take it in isolation, it doesn't mean anything. But if you take it in relation to everything else that sits around that customer and their behaviors and what they're doing, this is super, super insightful. Some of it's implied, some of it's actual. And yeah, health data, wow. I mean, you start bringing that into the picture. There's an awful lot of regulatory stuff that we need to go into to do that. But, finance data itself has got so much to offer that we can make much better decisions here. Absolutely. Open banking, open finance is all explicit permission for that customer to share their data. However, we see with our customers that acceptance to share the data is over 80%. Because if your use case is absolutely clear as to why you're going to share your data, there's a give to get here, the customers are prepared to share. And that number is going up. Only 6 months ago, it was around the 75%. It's now at over 80%.